for the scam people. They like to talk.
I don't want to talk about it. I mean, every now and then, but like always, the scam calls. It's like, for God's sakes. Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Looks like you're doing good. If you've seen the market today, you're probably feeling a little bit better too, huh? We are financial advisors here at Jazz Wealth. We got to move the microphone so you can see the logo, man. We wear the shirt every day so that you know who we are. We just like talking about the stock markets. We're the only advisors that I know of that actually manage their own funds rather than just some guy that goes and buys mutual funds that I could just show you how to do that anyways. But so happy for all of you that have decided to give us a chance. We know we are a small fish in a big pond, but we're getting bigger. We're not planning on being like stupid big, but we're just here having a good time, and we like talking about the market. So one of the things I like to do is teach you something. So every day, as painful as it is sometimes, I like to come up with stuff to teach you something. I've got a few things for you here today as we get into it. Also, our FinTips video, which is free and open to everybody on our YouTube channel. We just ask for a subscription or something, make us look bigger than we really are, is available today. It is me and Eric. We tried something different. Me and Eric just sat down and talked about something in particular. I won't give it away, but we sat down and talked about it, and we had planned to keep doing that, so that works out well for both of us. Let me know what you think in the comments there. We'll be anxious to see if that was a hit or a miss there. In short, if you're looking to get your dough straight and you just want to work with somebody that doesn't have any ulterior motives, no sales commissions or sneaky little fees or whatever, that's what we're trying to do. Our entire business model is literally set up that we only get bigger as a company if your account gets bigger with us, right? It doesn't work if we don't work for you. And I don't have a really catchy way to say that yet. Otherwise, you'd probably see a billboard or a TV commercial, but instead I'm here hanging out with you guys. So let's talk about this. Oh, by the way, Joanna and Jacob came by earlier and dropped off some Polish, they're from Poland, but they live in Chicago, very awesome. Some different Polish liquors and stuff. They stopped by with their 3 beautiful kids. And he says this is the one to go with here. That's like a cherry liqueur or something. Never heard of it, never had it. Wisnioka. I hope I'm doing it some kind of justice there. And then, one more here. This is, I don't know if anybody's ever had this. Maybe you can give me the heads up. It's called bison grass. It's apparently vodka. It's got a little piece of grass inside of there. So, very cool. Some of our clients that came by and took turns trading alcohols. I gave them some of our jazz wine there, and they were fresh off the beach here in Florida. If you're in the area and you want to stop by, you know we're always here. Shoot me a heads up. Happy to help and talk for a little bit if you like. Eric's always here. Cody's always here. Cody loves talking to people when they come in. Like, it's his favorite thing to do. He just steals the conversation. So if you want to come talk with Cody, I understand. Right? You can just come hang out with him. You cool with that, by the way?
Yeah.
You're cool with that? Yeah, you're good. You're good. All right. He loves it. Anyways, let's do the fun stuff here. Stock market. Got a bit of a rally here today. It was a broad rally, index level rally type participation. You know what I mean when I say that? So when you look at all the different sectors of the market, or if you have like a heat map and you want to do it that way, you see almost every stock was higher today. Well, that wasn't that there was some news that was related to utilities or real estate or tech stocks. That was broad index level buying. In other words, people said, the market's moving higher. I think this is the bottom. I'm worried I want to get in, but I don't have time to pick a stock. Go with the index fund or buy the S&P directly, the NASDAQ even. More people seem to buy the NASDAQ here today. And as far as the performance of the markets go today, it's referred to in a number of different ways. Some people call it a power trend day. If you're a day trader, it's basically where you start higher and you never really pull back all day. This is the start of the day right here. They call that a power trend day if you happen to be a day trader. It's kind of like you don't day trade, you just buy and then you sit there and you hold and you keep doing trailing stops. If you're not a day trader, a lot of people refer to this day as a gap and go, meaning we gapped in one direction and we just went. There was no looking back. There was no volatility. There was nothing. We just kept moving forward there. Maybe a touch of short covering in there. I'll give you that one as well because of the elevated short interest. I'm going to share that with you here in just a little bit. And the only individual stocks that didn't really participate today were earnings related. I'll cover some of these, but you got IBM, of course, earnings there. Johnson & Johnson. They were really, Bristol Myers, I believe, was the other one. Yeah, there you go, down 0.8%. So that was really it for stocks that didn't participate. It had to do with some kind of earnings there. Now, there were some big rallies under the surface, and I don't mean stock-wise there. half of the sectors today, over half of the sectors today gained 3% or more. Industrials were your leader today. Big gain off of bottoms there. There's people just betting on the bottom. Communication services, the same thing there. Every sector was a winner today, and every sector gained more than 1%, except for utilities. Still a winner, but only 0.6% gains on the day there. So that's a broad rally there. As far as the S&P goes, we're still down 17% year to date, but, nice to see a little bit of life in the bear, as they would say there. So don't know what this leads to, but this was clearly a day where people felt that the bottom was in, or they felt that at least they were close enough to a bottom where it was worthwhile to put a little money in for the moment. Now, we have seen these days, we've seen these days where you go, the bottom's in, and it's immediately taken away from you. The bottom's in, took a little longer, but it was immediately taken away from you, right? We've seen that. So what we want to see now is what we have been seeing is the fact that the down days really stand no chance to erase the gains of the up days there. Also, I'd point out that the mid-cap factor of the market, when we talk about different factors, we're talking about different asset classes in a chunk, essentially, small, mid, and large cap, and then we break it into small cap growth value index, or core. You could say core sometimes. Mid cap was the one that showed the most signs of life as compared to all the other ones, which is good because we're looking to add to our mid-cap fund there. Also, I noticed that clients, the emails have changed a little bit. Clients are now starting to say, we want to be more aggressive. Dustin, I do want to take 10% of my account, make sure it's being more aggressive. Dustin, I do want to switch from moderate to aggressive. I want to switch from savings-oriented to a little more aggressive. And I haven't seen that in a while. I don't say it to brag. I say it because of the client base. Having about 7,000 clients, that's a decent sample size when you start noticing the mood change a little bit. I can always tell when people are getting nervous, that if I get a handful of emails, people are getting nervous, I'm probably going to see a few more. When people get a little excited, you're probably going to see a few more there. So again, I'm not saying, look at us, we have lots of clients. I'm saying it as sample size. Most advisors have 100 clients or less. All right, that's not a lot of data, right? So you could feel that here today, just ever so slightly. Let's take a look. Rambling a little bit today. Sometimes you guys say you like it, but let's focus on the good stuff. The Dow. So the Dow today really driven by financials. Remember, the Dow is price weighted. Goldman Sachs, one of the highest priced stocks in the Dow. So up 5.5% on the day, gains almost 17 points. That had the biggest impact on the Dow's moves. It was the biggest contributor to the Dow's gains today. Looking down the list here, Caterpillar would come in second place there. Not a financial, but I want to point that out. That had a big impact as well. You've got the others, American Express. Come on. There you go. American Express off lows, and I'm not going to bounce around. We're going to go to the XLF because this is the ETF for the large banks like your Goldman Sachs, Bank of America, etc. Up 3% on the day. You know that financials are the third largest, heaviest weighted sector in the S&P, so that explains that. But in the Dow, these had the highest prices, and so they were the biggest contributor for the Dow. Different story there. I've gone over that in a video there. Anyways, this puts the Dow, let's go back over here. It puts the Dow within 2% of being in correction territory. That's a fancy way of saying another 2%, and it will only be down 10% for the year. Remember, the Dow is the best performer year to date in terms of losing the least amount of money, and good for them. If we look at the NASDAQ, best performer here today, still the most volatile, by the way. In exchange for higher returns, you usually have to accept more volatility. And I haven't done this video in a while. Did you guys know that the ratio between reward and risk is not linear? Or I should go like this, right? It's not linear, meaning you can't take exponentially more risk and assume you'll get more return. It's a diminishing curve, right? So I've covered that in videos in the past where I've seen people that fall outside of the curve, meaning they're taking more risk for the same amount of return that somebody can take with same amount of return someone will get with less risk. Right? That's the most fun thing to do, is to tell somebody you can slow down. Your return's going to be the same, but you won't notice this stuff happening all the time. Really, really cool. Anyways, the NASDAQ being more volatile was the gist of what I was trying to say. And by that, we were down 32%, the NASDAQ anyways. just a few weeks ago. Now we're only down 24%. Look how fast that thing is moving. So again, volatility is there. You expect that to continue, especially with big tech stocks lined up to report their earnings. Anyways, today, NASDAQ 100, over a third of the stocks in the NASDAQ 100 gained 4% or more just today. Right? Shows you the kind of action there. Pinduoduo, I believe. Yeah, down a third of a percent. That was your only loser. Okay. No, we got to go one more. Right at the end of the day, Exelon went negative. So those are your only two losers in the NASDAQ 100 today. As far as the Chinese stocks go, China had a pretty tough night last night. It got better as the night progressed there. But a lot of stimulus volatility over there. Chinese industrials are where it's at if you're a global investor and you like that sort of thing. That's where you're going to want to look. Oil. Off the 200-day moving average, continuing to do that, which means all your oil stocks, your oil service stocks, anything that you've been hanging on to, you're getting that bounce. You do not expect that this bounce takes you to new highs, right? I can't tell you what to do. I'm not allowed to say I think this stock goes from 70 to 78 in the next 3 days. Getting a lot of trouble for that with the SEC, and I'd like to keep them happy. But anyways, in this case, the way we fell here, you do not look at that. You look at this as a short-term bounce. Take a little profit if you happen to get a good entry, and you run away. It's a short-term trade. It is not an investment at this point. And let's see if that plays out just for my own. I don't have much of an ego, I guess, but let's let that build up a little bit, right? Give me some ego points. And the Russell also higher as well. Not much to cover there. Gold could care less. Gold wanted nothing to do with the dollar getting softer, right? It's now like 4 days in a row. No, gold doesn't care. Everybody wants out of gold at the moment. You've got bonds. Rates continuing to move a little bit lower, a little higher. Bond prices moving a little bit lower there. Not a big deal. It's been mostly flat over the last week or so, so not a big deal. In our Wine and Wealth class here this week, we're going to do something really interesting. It's going to look really simple. Actually, it won't take me long to explain. It's going to take us a while to put it together. We're going to visualize your buying power as a normal American with your putting 20% down on a property. We're going to visualize your buying power over the last year, and we're going to visualize your monthly payment, the change, so we can show what's going on in the housing market using pure data. Everybody's got their beliefs of what's going to happen out there. I'm going to show you exactly what's happening. I'm just finding a clever way to make it where I can show you instead of just throwing a bunch of numbers at you, and I think I've got the way there. So that'll be Wine and Wealth this week, if you're interested. It will be open to research members as well. If you are a research member, Cody, you got that. So make sure they can get in there. Because, by the way, the research site supports, I use it to support Drum Corps International, something I believe in and like to support. And I'm not very public about it, but if you could see the difference that we've made with some of these different corps, they're loving it, man. So I'm going to keep doing that. And so we'll make that a good one for you. You can join the research site if you'd like, jazzwealth.com/research. Let's get into the good stuff here. I mentioned a minute ago short interest, right? There's an elevated short interest in the market, as there probably should be, right? People like to get more short when the market gets weaker. That's the retail approach. People like to get more long when the market is moving higher. You know you've fallen for it before. So what I thought I'd do is, I know some of you like this. So we looked at all of the industries that have the highest short interest now versus where we started, right? So rather than just throw you, hey, short interest, here we go. What's changed? I wanted to be able to show you what's changed. Here we go. So can you read it? Let's start here over at the bottom right. I'll share this with you. In the retail space, black is now, blue is the start of the year. So we're showing the difference between the start of the year and now. In other words, at the start of the year, the blue line for retail had an elevated short interest, but it's only become worse. More shorts than there were at the beginning of the year. So you look at retail and you say, if there's any significant move to the upside, you'd expect to be able to blame a little bit of short covering on that, right? And if you're not familiar with short interest or shorting stocks, maybe we'd do something for you on that one. Pharma and biotech typically has an elevated short interest. It's a wild ride of a Bronco. I would never touch it, but nonetheless it does. And the short interest has been elevated, but not as much as automobiles, right? In the automobile industry. And a good example, if you want to look it up, is Nikola, NKLA. So at the beginning of the year, still elevated short interest relative to the other industries, but you see it's increasing at a more rapid pace than really any other industry at the moment. Consumer durables, media and entertainment, Oh, by the way, if you want to look in retail, I looked up a few just to see. Dillard's, DDS, and Big Lots, BIG. Those two stocks rank towards the top. As you work your way down, you can see that short interest has actually fallen in consumer-type staples. This would be your canned soups and things like that to try to point you towards stocks there. Telecommunication services is the official telecommunication services. It's not communication services there. Semiconductors, a little bit of elevated short interest there. You can see that the tide has turned for a couple of them, even coming over here to software. The participation maybe has kind of wound down, right? So those that wanted to short your software stocks, not that there's so many to choose from these days, that's dried up a little bit. And just a nice little thing for you to maybe screenshot and go, you know what, I don't mess with biotech either, but I'm interested in retail. Maybe you want to play counter trend, start your long position, or maybe you're interested in joining. Those are short there, but I wanted to point that out. Now, where we go from this, there's a saying in the stock market, you never short a dull market, right? We don't have a dull market right now. I'm just saying. You never short a dull market. Typically, we use this saying over the summer because over the summer, the stock market gets dull. We all go on vacation. I see my call schedule. Hey, like nobody on there. Yeah, a couple people here and there. You guys are all on vacation. That means you're not making emotional decisions in the stock market. Emotional decisions create volatility. If we have less emotional decisions, we have less volatility. All right. So you never short a dull market. And here's something really interesting that I found. All right. On days where the stock market has below average volume, it performs better than when it has above average volume. So these wild days where you see volume, lots of people trading, I would think that volume would lead to higher performance over time. That's not the case. And the reason I think that is because you're all taught, like basic technical analysis 101 is find a base in an uptrend and buy when it breaks the top of the base on increased volume. That's not technically true over the long run. And here we go. We're going to prove it in one way, and then we're going to experiment maybe later with some different ways to see it. Here's the S&P performance for each year. So for example, in 2010, if we look at the S&P total performance there, it gained 12.78%. It had a period of down days equaling 18.6 and a period of up days equaling 38.9, right? And that's not all the days, because what we did is we said, if it's below average, let's see what the returns were cumulative on the below average days. If it was above average, let's see what the returns were. In almost every single case, you can see that below average days actually yielded a negative return. Above average volume days yielded a negative return versus below average days. You wouldn't expect it there. So in 2010, if all you did was invest in the days where volume was bigger than average, thinking, hey, that's good, you actually would have lost 18.6%. If you would have invested in days that were quiet, boring, uneventful, very little volume, the summertime even, you'd have made 38%. You'd have beat the market, essentially. That's true for every single year. Again, we only went back to 2010, just had to pick a spot to cut it off. There's no special reason for this. In every single case, above average days, the results were negative returns, except for 2017, but it still beat above average volume days. So the moral of the story there is you don't short a dull market, because a dull market yields an average return that's going to wipe you out if you stick with shorting those markets there. The other part to it is, when you have above average volume days, as a long-term investor, you have to be in there. You have to put dollars to work. It's never fun. I agree with you. It's never fun. But on those above average days, like we're seeing, the market's all over the place. People are trading left and right, making decisions. Those days tend to be negative. Well, as a long-term investor, you want to buy as cheap as possible. You don't want to buy up here, right? You want to buy down here. And then when you retire or get close to your goal, okay, then go ahead high as you want, right? Think about that for a second. So that's one of those ways that if I can point out the data, instead of me sitting here going, I'm an advisor and you're supposed to buy every time, I'm supposed to tell you that, that's what it is. No, give me data. Tell me why. What is it that's going to benefit me? How am I actually going to be benefited from doing something that's rather uncomfortable? I would agree. All right. No new highs today because there were only no highs and lows. There were only three. There were CNC, Humana, and Hasbro. That's it. New highs, new lows. There's nothing else to explain there. And so we'll skip that one there. We did the same yesterday. What do we got here? Johnson & Johnson is in the news. So that's earnings related, right? So Johnson & Johnson reports earnings there. Sales and earnings beat just barely. They lowered their guidance for the rest of the year there. And what did they blame it on? Forex headwinds. That's the dollar being strong. We covered that yesterday, right? So there's a great example of someone saying, Forex headwinds are really ruining us here. The dollar, strong dollar bothers them. You can look it up. They do a lot of business overseas there. Production costs were also an issue because, well, they produced a whole bunch of COVID vaccines and nobody really needs them right now. Meaning there's enough, not that you don't need them, but there's enough supply where if you wanted one, you just go get it, right? They had the thing too where they weren't the best vaccine, but nonetheless, there's enough supply out there. It's a good problem to have unless you're Johnson & Johnson. So they said, well, we've oversupplied the market a little bit. We've got to cut production there. Darn it, we're not going to make as much as we thought. So be it. Moving on. You got Starbucks. Rather interesting comments from the CEO, Howard Schultz, who has been the CEO 3 other times. Howard Schultz says he's going to increase the number. They've been closing stores because of the violence in these local areas. They're going to increase these. They've had enough there. People coming in and just graffitiing on the bathrooms and everything, or using the bathrooms in a delicate way. And so he's like, we're just going to start closing stores here because we can, right? They can go open stores elsewhere where they're safer. It's kind of seen as a political movement there for him, or a little jockeying maybe. But nonetheless, it's in the news. That's what's going on. Investors seem to like it. Hasbro misses on revenue by 2%. Now, normally I wouldn't talk about Hasbro, but check this out. They make new 52-week lows. I just mentioned that a second ago. Earnings beat by about 24, 25%. It was really good. The problem was it wasn't where we want them to beat on earnings. What do you mean we're dead? Where are we going? Where'd we go? We're back, right? There you go. It's catching up. Yeah, it just froze for a second. Let's let them see the pretty face there. Ooh, well, we made it through to the Starbucks one because I got you fired up about that. I was saying that Hasbro, so Hasbro missed basically on their earnings, but it was due to the film and television division of their business, not the physical toys. People were buying physical toys. I just found that fascinating because, well, you don't see that often. Anyways, moving on. We have another one. Occidental Petroleum. Warren Buffett's favorite there. And I believe they are, what did they do? Bought more? Yeah, they bought another 2 million shares. So they're just loading up on Occidental Petroleum. Yeah, I didn't read that one earlier. So Warren Buffett's company buying a whole bunch more shares of Occidental Petroleum. They've got a sizable position. Occidental Petroleum is the best performer in the energy space. Can you guess why? Does it not have something to do with old Mr. Buffett there? And what else? Oh, that's Johnson & Johnson. We're going to go over to Lockheed Martin. Lockheed Martin. Now, I like this one because it was already extended. This is a day trader's kind of a dream there. An already extended stock reports earnings and gaps lower to become even more extended. They actually missed on earnings, so it started a little bit weaker there. Every single division saw a decline in sales year over year. Aeronautics is where we all like to look because that's the fancy, cool fighter planes and stuff like that. You could have basically said that their aeronautics division accounted for the entire miss. Right? If you back everything else out, that was the problem there. Backlog is down 5%, and sales guidance was lowered for them. Elsewhere, what do we got? I think Netflix has safely reported after hours, and let's take a look and see. We'll do this in real time. It gets a little bit of a pop. We're sitting around 216, 217. What is the news with Netflix? So they were expected to lose about 2 million subscribers. They lost less than 1 million. All right, that's the good news there. And then, oh, hey, guess what? We're going to add 1 million subscribers next quarter. So we lost less than expected, and we're going to add everybody and more than what we lost. We lost 970 apparently. Problem is that probably put a little bit of a lid on this pop here because we were expecting 1.4 million subscribers to be added in the next quarter. So that's a little bit lower guidance there, even though it's still good news. You know what did it? And apparently this is coming up. I bet you it's in here. Come on now. So you guys watch Stranger Things? I bet you this is what helped them not lose as many subscribers. Hold on a second. I'm doing this in real time, so I don't want to mess this up here. All right. There's the comment there. Yep. Okay, so Stranger Things. I've never seen the show, Myself, I hear it's awesome. I despise the song that's going around the internet right now, the old song. Anyways, they spread Stranger Things over 2 quarters. In other words, they didn't just release the season inside of 1 quarter to where you could just cancel your subscription afterwards. They got smart. They said, let's just spread it over 2. So that is one of the reasons that they are saying they lost less. That was a strategy for them that did pay off there. Very nice. I thought that would come up there. Also, remember 2 days ago, they talked about working with Microsoft to have that ad-supported model there. That's got to be in here somewhere. They said that that will be launching in early 2023. Okay, that's ahead of schedule as well. So good news for them. If you've had Netflix for a while, you've been punished. And, not amazing off the surface here. Again, I haven't looked at it too deeply, but not bad. Probably much better than what a lot of people thought. Tomorrow's earnings, you got Abbott Labs. A couple semiconductors in there, Alcoa, what do we got? CSX, the railroads there, Discover, Kinder Morgan, Steel Dynamics, Tesla, and United Airlines. If we're still here with you, I will take your questions and go from there. I did watch Tiger King. Yeah, I did watch that. It was one of those where everybody said, yeah, you got to watch it. And I did. It's all right, It was more interesting because it was real, I thought. What else do we got here? Chris says, with inflation going crazy, can we expect the Fed to stop printing money for a few years, bringing the average inflation back 3%? They have already started that. There's a handful of different ways they've been printing money. One of them was by buying mortgage-backed securities. They are letting those roll off and rather rapidly. So that's phase 1 while they go into phase 2, which is raising rates to try to slow the velocity of money. So only reason they raising rates, it doesn't immediately affect you, right? Raising rates slows how fast money goes back and forth. If we reached a peak there where when a dollar came into your pocket, you let it go faster than you've ever let it go in life. That's how you get inflation, right? So they're trying to slow that velocity of money. And I believe on the Kansas City's Fed's site, you have to look it up, but one of the regional feds actually reports the velocity of money. They need to see that you get a dollar and you're a little bit nervous to let it go out of your hands. That will slow inflation. That's their game plan there, without saying it fancy like that. Yeah, that Big Cat Rescue is actually right by us here. And apparently, not to get off topic, right? You tell me if I misunderstood this. Carol Baskin, right?
Yeah.
She don't live in that dumpy little trailer that it makes it look like.
No,
she don't live there. She lives next to the Lightning players on Davis Island.
She lives with all the athletes, yeah.
Yeah. Oh, Carol Baskin's got a very nice house.
She's doing just fine.
Yeah, don't let her fool you with the whole... She was sitting in the trailer with the closet in the background, making it look like she sleeps there. Ain't nobody sleeping there. You haven't fooled me. But I didn't know that. Because the hockey players apparently go around town saying, "Ooh," we don't talk to her. It's crazy, man. K. Presti, do you think the CPI and PPI did not include the reduction in gas and commodities? It did not. Therefore, we could have good news. Yeah, it did not include it. It was a little bit towards the end of June, but it didn't include the full bulk of seeing energy pull back like it has. Yeah. Does Nancy Pelosi still have the calls on Google stock? It's not Nancy Pelosi. It's her husband. And yeah, she probably doesn't like that we mix that up because she has no knowledge of what he's doing, right? Come on. Dude, my wife goes to Starbucks and I know she went to Starbucks. You know what I mean? Come on. She comes home and tells me about her day, things I don't care about, but I listen. Imagine old Pelosi coming home. There's my wife right now. Ooh. Let's stop with that. Tandra, you trust the rally today or just to sell the rip again? That's where I'm stuck. I'll honestly say it's a guess. I don't honestly know. What I worry about is what we've seen. We haven't seen a lot of it lately, right? So I would say I'm leaning more towards trusting it than I was in the past. We are no longer in a downtrend, and we have had these rally days not get fully erased to new lows. That's the one thumbs up that I would give it, right? We had the chance to reverse it yesterday. That was horrible. Just kept selling off. Didn't do it. In the past, we would have erased all of it. So it seems like maybe that tide changing just a little bit there. So I'd give it a little bit to that side. But again, I could be horribly wrong. Daddy Pelosi, yeah. Giovanni's bought a SPY put when the SPY was 386. All right. When was that? I don't often look at the SPY. So you thought it would be a new low. That's all you did there. You say, well, I see what we're doing here. We've rallied up. Maybe you did it in here somewhere or somewhere in here. You got your pullback, but it wasn't big enough for you to close it out, apparently. And so the question is, any thoughts on a pullback? I would not like to be a SPY put owner at the moment because you've got at least a little bit shifting towards the possibility of even just a reasonable rally. Not a rip your face off, see you tomorrow, back to highs rally. You don't have to worry about that, I don't think. But, yeah. Continue the lessons like yesterday and today. It's an angle I don't see anywhere else. Well, thank you. I appreciate the comments there. Why not? Yeah, that's true, Andrew. So he's over here making a lot of money. Does he just keep it and go drunk driving out in California? I went too far. Drunk driving in California and not tell her? I mean, come on. That's a tough one. And by the way, Cody looked it up, just to be fair. She's Democrat, blue. She's not her husband's not the best trader this year in Congress. It's actually 2 Republicans leading the way. So this is, I'm picking on her. She's the most public at the moment. But, boy, they all got problems. They're all trading. And what's his name, too? Jerome Powell at the Fed. They just got all cleared of insider trading. No wrongdoing by the Fed. As they should have, right? They didn't do anything wrong. Although they actually said they were purchasing these bonds. Okay. I'm done. I get fired up here. Anyways, like the transports. Oh, Doc, so you got a lot of transports coming out, right? This is sort of the transport season here for earnings. So Martin Transport, you obviously saw that. JB Hunt is in there as well. They reported today. Basically, all of them are going to be reporting this week. So all that action, either in sympathy of another stock reporting earnings or because they reported earnings. That's your week for that, so careful there. You're welcome, Giovanni. Thank you. All right. Well, I've once again, in rare form, have managed to link politics to financials. And so got you guys fired up. I'm going to let you go and take it out on the cat and stuff. I will be back tomorrow, of course, if I haven't offended you. I'll be back tomorrow. We'll talk about the stock market, and we'll continue teaching stuff. I really enjoy doing the teaching, the educating side of things there. I think it's fun. And I will be back tomorrow to do it all over again. Enjoy the rest of your day. Thanks for watching.